Hi, I'm Kyle with Orange Focus Media. In this video, I'm going to show you where your tax dollars are going, and I'm going to teach it in a way where you will understand exactly how to do this in the future. I just ask if you get something out of this video to please like and subscribe. Okay, the first step is to navigate to a website called usdebtclock.org. This website provides so much helpful information and insight into the financial status of the US government. The second step is to build an Excel sheet or Google sheet where you can input some of the information and calculate a couple things. Let's get started. First, let's go over a couple metrics to understand. Federal spending. This is how much the US government spends on an annual basis. Pretty simple. Federal tax revenue. This is how much the US government collects in taxes on an annual basis. Think of the US government like a business, and their revenue is the taxes you pay. Then there is the deficit. This is the federal spending minus the amount that they collect in taxes. If they collected more taxes than they did spend, this would actually be a surplus. And then below here are the largest budget items. This is what the government spends most of the tax money on. Alright, so I'm now going to plug in some of these items into my sheet to simplify what we're looking at further. I'll fast forward this part. Now that I finished plugging in all of the numbers, let's see where our tax dollars go. The numbers are so large that it helps to look at them with percentages. I took the percentage of each spending category divided by the total amount of spending to get the percentage of the US budget spent on each category. We spend 27% of our money on Medicare and Medicaid. There are a lot of concerns around this, given the fact that when you visit a hospital, it costs $20 for a single Advil. You can see why hospitals are okay charging absurd rates, because they get trillions of guaranteed money from the government. This is a rabbit hole of corruption in and of itself. We then spend 22% of our money on Social Security, which also could be looked into, as there's probably widespread corruption here as well. We then spend 13% of our money on defense, which arguably is a category most people are okay spending money on. The problem is actually very similar to the hospitals, where there are stories of 50-cent bolts costing thousands of dollars. Next, we have interest expenses, which could be understood as minimum payments on our debt as a country. I will explain this line item more in a minute. I then included a couple other categories like education and infrastructure. The point is that most people think this is where our tax dollars are going, but as you can see, we only spend about 1% of the budget on each one, which most people could agree this should be higher. One of the key things to understand is that we spend more money than we take in as a country. I included below the amount we spend and then the amount of tax revenue. If I were to do all these same calculations based on what we take in compared to what we spend, the percentages would be far higher. Now, let's look into the deficit further and its impacts. And again, the deficit is the difference between what we spend and what we take in as tax revenue. That difference is known as the deficit. Let's understand the line item, interest expenses. Every year, the government pays money to the people that finance the government debt through bonds. We pay bondholders an average of 2 to 4% a year on average to help finance the debt. This is on top of the debt that we still owe. This amount gives us the interest expense on the debt line. It's helpful to think about it as if the US is doing the bare minimum payments on a credit card to satisfy the bondholders. Now, let's understand the real horror of this debt problem. That is, money creation that causes inflation. The debt will be sold to the public as bonds. About 50% of the bonds are purchased by banks domestically and around the world. Bonds are seen as cash equivalents, meaning that they are treated like cash, as the US government guarantees to pay the bonds out because it has a money printer and can pay back no matter what. So half the deficit is purchased by banks, giving us about $800 billion. Then, the banks lend the money out as credit. Think mortgages, car loans, business loans, etc. They usually keep only about 10% of the actual money deposited in the bank, and then the rest is lent out as credit. This is known as fractional reserve banking. So that $800 billion in bonds that the banks purchased is now turned into $8 trillion in new money flowing into the economy. This $8 trillion will go on to cause widespread inflation throughout the economy and the prices of everything to increase as the money supply gets diluted. Now you can understand how bad the deficit is for the economy and the average American. I covered a lot in this video, and I hope I helped paint a picture of what the US does with its taxes and why you should be concerned about it. Thank you for watching.